Friday, everyone. Tom Grisafi, Ag Bull Media, Ag Bull Trading. I'm an AP associate person of Nesvick Trading. Boy, do we have a show for you. We call it the LFG. Let's go. Let's bring him in the show, Mr. Luke Lloyd. Luke's a friend of mine. I met him on Cow Guy, our good friends over at RFD. Luke recently opened up his own shop, and he is what we call the young gun, the young millennials. But boy, can he sling it. Stage is yours. First subject of the day. Let's not waste any time. One, welcome. Two, if I say crude oil, you say?
I say a lot, actually. I say, let's freaking go, because it's booming right now, up 9% overnight. With the trade tensions in the Middle East tensions over there, with Iran retaliating over in Israel, I think we have to pay attention to this because there's a lot going on here. And obviously the story's been for the past couple of months that tariffs are going to be inflationary, but we also saw this week PPI and CPI coming in lighter than expected. So now everyone's scared again because 9% rise in oil prices means that inflation might rear its head back around the corner if these oil prices stay. Also, you got to think about natural gas and all the other fun commodities out there that could be impacted by some of these tensions from a supply constraint standpoint. But look, I think at the end of the day, we don't have to worry that much about these oil prices remaining too high. I think we have to look at the economic data when it comes to the consumer, the job market. There is deteriorating data out there. I think that's going to offset any kind of supply constraint that could exist down the road with these geopolitical tensions remaining whatever high, or whether or not it increases or decreases. So I think that economic data is deflationary, disinflationary, which is why I think the Federal Reserve is probably going to be cutting rates very soon. So I know I hit a lot of different things there, but from an asset allocation standpoint and from an investment standpoint, I like natural gas companies over oil. Think Cheniere, LNG. Think the commodity directly, LNG. I would rather own something like that than oil at this point because of the demand created because of the AI infrastructure, all the cloud, all the spending habits happening on the federal level, on the company level. There's so much spending happening directly going into AI infrastructure. That demand is going to increase only over time. And that energy need, 50% of the U.S. energy grid is supplied by natural gas.
Wow, wow, and wow. That's a hell of an introduction for his first time on the show, Mr. Luke Lloyd. All right. The show will air on Saturday on 6/14. You and I were trying to record this on Thursday, and StreamYard, the platform we love to use, was down, which I wanted to tell you. Isn't it interesting how all the Google and so many cloud services went down yesterday afternoon? Techs weren't working and everything else, and then magically a major war started, right? Like someone didn't have a couple things blocked in the world because I couldn't
I'll be honest,
get on.
man. I thought for a couple of days this week, I had some tech issues all around, whether it was email, whether it was some of my softwares. I was kind of concerned, some cyber attack, whatever it be was going on. OpenAI, ChatGPT was down for like a couple hours, if you remember, on Wednesday. What do you think, man? Was there something bigger at play here?
It feels like it because I've used StreamYard for 2 years straight. I've never not been able to get on it, which just shows you, Luke, we get so used to thinking I click a link and it's there. And I'm, first time having you on, you're probably like, these guys don't know what the heck they're doing. You're the first person I've ever sent a link to, and like we couldn't do anything. I'm like, sorry, show's canceled, right, bro? And that's just what happened. If we would have recorded this yesterday, it would have been more of a somber note. We would have been talking about 3 rate cuts. I think you could start pulling those rate cuts right out of there. I've been talking to producers. Hey, corn, beans, wheat, all closed on the high. That's a big plus. We had some news out of the EPA today. It may be a little out of your wheelhouse, but bottom line is the EPA is very powerful, and they gave a very favorable ruling towards these fuels. Now, with that, crude oil up 13%, up $9 last night. That's equivalent to saying soybeans up $1.40. That'd be a limit and a half move. And as you know, Luke, the energy markets are 10 times bigger than the American grain markets. One thing to note, because you come on before me or after me on the Cow Guy, is that cattle have had a hell of a run, but cattle closed on the dead low. Cattle, feeder cattle, live cattle, everything else. And when you talk about the American consumer being a little pinched, I placed an ad. You're young, but I placed an ad on Indeed this week. First time I've ever used Indeed, looking for a podcast producer. Probably my brother Joe down there's like, what? I'm out of a job, but I'm in Nashville, and I just casually placed an ad. Podcast producer. I had 35 people respond to me in 24 hours. I had to take the ad
They're looking
down.
for something. Yeah, and
Yes.
that was not happening a couple years ago.
No. And so there's a gentleman coming in today, and I said, "Can I ask you something? Why is everyone applying?" And he said, "AI is kicking our butt."
Yep. And that's only deflationary. And this is why there was an article came out today. A reporter contacted me, and we talked about my kind of outlook going forward. And that's why I've taught utilities and long duration treasuries. And everyone says, "Oh, Luke, no, because this ridiculous spending because of the big beautiful bill, or the ridiculous spending happening in the government at all facets of the levels. That's going to help, or actually downgrade our debt," which we got the debt downgrade a couple weeks ago from the AAA rating. I'm in the camp that only because of AI and also because of the slowing economy, tariffs, whatever it be, oil going up, all of that's going to be offset by AI, deflationary AI, and also because of the slowing economy. And when I say deflationary AI, the whole point of AI is to make companies more efficient. So systematically, unemployment has to go up. And if unemployment goes up, what happens to the consumer, to those jobs when they lose their jobs? Or there's people when they lose their jobs, they have to pull back their spending habits. So this is around the corner. I mean, I use AI every single day, and I'm not kidding. It probably adds 60 to 80 hours of productivity to me and my business every single week. Just me, myself using it, not my intern, not anyone else. Me directly. It's basically making me 3 times as more productive. So it's going to save, otherwise a couple of years ago, before ChatGPT and everything, if I was to start this business, I'd probably have an extra $150,000, $200,000 of extra expenses per year for assistants or people helping me on social media or doing whatever it be, my newsletter that I have every single morning, my emails, my, anything, my notes that I do for TV, whatever it be, it helps me out on a daily basis. All my content doesn't come directly from AI, but it definitely aids my mind. And it actually gets me thinking a little bit differently, which helps because a lot of people pigeonhole themselves into thinking just one way. If you have AI pumping out all these different philosophies and perspectives, it helps you think. So there's absolutely that initiative. And that deflationary aspect will happen when unemployment rises because of AI and because it makes cost of doing business cheaper. That's all deflationary, which is why, again, I'm long duration treasuries for my clients, and I'm also long utilities because of a dual deflationary aspect and the energy demand with electricity.
Speaking of your clients, we fast entered the show. Who are you? What do you do? You got this new gig. Go back.
I'm sorry I didn't introduce myself.
No. But you and I have each done 3-4 other shows today. So we're like, just hit play. We'll figure it out. But who are you? What are you doing? And how are you helping people?
Yeah, great question. I guess to sum it up, I'm from small town Ohio, blue collar area called Martins Ferry, Ohio, Southeast Ohio, steel mills, coal mines. That's how I grew up. And my entire life, I went to a small school, made the connection that actually led me to New York City to intern at CNBC. I was the annoying intern that shook hands with everyone at the stock exchange trying to introduce myself. That's where I met my ex-boss, Mark Tepper. He was a phenomenal mentor to me in a lot of ways. But really growing up, I saw a lot of people working their tails off, right? And that mentality, that blue collar mentality was always instilled in me. And I'm like, you know what? I got married in November. I'm thinking about having kids. Before I have kids, this is the time to take any kind of risk and bet on yourself and, risk it all to lose it all potentially, right? So I decided in that moment that, this is the time for me to create my own legacy and try to create my own purpose and add value to my clients. So that's when I disconnected a few months ago. I started my own group, Lloyd Financial Group. And so far it's been rocking and rolling. I think people are pretty happy. And now it's just about being genuine, being real, and being authentic. I think this industry is full of a bunch of finance bros that are chest out, egotistical people. And that's just not where I come from. That's just not who I am. And I think I hope my clients appreciate the authenticity. And I always preach, dream bigger, sleep better. I'm here. I don't sleep so my clients can sleep. I'm here to be that comforting factor in a lot of ways. And I'm only a text message away. Communication. That's another thing missing in this industry a lot of time is, people collect fat paychecks and sit back and don't really communicate or talk to anyone or do a lot of work. So I'm here working day in, day out because this is my livelihood now on the line.
And that's a great point that, with AI is great and that we can auto text, auto email, auto that. How about just pick up the phone and call someone old school, right? And say, here's what we have. Dow's down 800. You wanted to allocate some money. Here's what I like.
You've got what? Two girls, right? 2 kids?
Yeah. 2 daughters. Yeah. 23.
Yeah.
21,
2 daughters.
yeah.
I mean, you see firsthand, this generation, I'm technically the oldest Gen Z being 28 years old. So I was like the first one cut off between millennial and Gen Z. I mean, I think the most dangerous mindset and the most dangerous skill set, that anyone can have that's a Gen Z is just people skills. Look people in the eyes, shake someone's hand. Like that will go farther than any kind of education, because these screens, these laptops, these computers, phones, it's screwing people's minds up. So it's funny how, like you said, picking up the phone, cold call, like whatever it be, the old school. It's funny how I think we're transitioning back to the old school because we're so content fatigued and we're so drained by our phones almost every day.
Yeah, I started. We're in a process of sending clients just one of those big Yeti tumblers that says Ag Bull and Nesvick and stuff. And I got the nicest phone calls as people are like, "I got your tumbler," and I'm like, "Oh, yeah, that's right. I set those out, right."
It's the
Two
little
things.
things in life. It's the little
They were
things.
grateful, and two, I was shocked at how much one Yeti tumbler costs. So I will send
that's
you
why
one.
it's on my budget yet. My clients aren't getting Yetis this year, maybe next year.
I'll send you one. I can't send you two. You and your wife will have to share. What else would you like to talk about? This is recorded. There's no length. You and I are so used to doing when I fill in for Scott. Okay, Luke, you've been great. We got to go. But we don't have to go anywhere. How do we get people?
Me and you, I mean, we always talk on the phone too, and we have really good conversations because we're always thinking deeply about things, right? I guess my question is for you, what is your take on, and I hate to always talk about the Fed, but no one really talks about the Fed much anymore. So let's bring it back into the conversation.
Sure.
Talking about the 3 rate cuts that were projected before this inflation data came in. Is the Federal Reserve, in your opinion, late to the game? They were late to the game on the rate hiking cycle. Are they late to the game on the cutting cycle right now?
No, because there are still some things that are inflationary. And I think one of the most, I don't know if you know this, but I stood in the 10-year note and the 30-year bond at the Board of Trade. So I traded a lot of treasuries, yield curves, et cetera. It would be really, really, really embarrassing to cut rates and have a surge in inflation. That would be like having a fire put out and then thinking it's put out, turn your back on it, and then you have a raging fire again. You don't want that. So we could stay higher for longer. We're going into more of a period of normal. Bunch of people your age are complaining and whining like little kids because you can only get a mortgage at 7%. And the whole rest of the world spent their whole life getting mortgages at a heck of a lot higher than 7%. We are in a reset. It is affecting prices. I am watching the real estate market. I have Marco Island, Florida set up on Zillow, and I had to disconnect the notifications because I'm getting 20 notifications today per day of properties dropping. We were overinflated. Insurance has exploded. The Airbnb things popped. People are losing a few jobs here or there. Like I told you earlier, I placed an ad on Indeed. I was overwhelmed with people applying. Things are changing, but we are having a reset. And when we give away as much money as we gave away during the COVID period, and then the wealth that was created during the boom in particular agriculture during the Ukraine period, we distort things. We're just gently undistorting that. So the fact that the stock market was doing as well as it's been doing with this higher interest rate environment is absolutely amazing. And there is an added benefit. People, grandmas and grandpas and conservative people can just put money in a CD or a money market account. They don't have to go full blown into NVIDIA. So if you have $1 million, $10 million, probably not what you want people to be like, go ahead and put it in a CD. Oh, by the way, I'm Luke from the financial group, right? But at least they have that choice. And so when interest rates were artificially kept low all that time, it forced people in the stocks. Now we have choices. Have some stocks. Hey, speaking of stocks, let's talk about commodity that's been absolutely freaking on fire. Gold. That is a choice. What do you know about gold?
Yeah, I think it's going to continue to hit all-time highs. I mean, I think talk about reset. Let's focus on that word reset. You go back throughout history. You have 3 main reasons why a country, number one country like the United States, fails. It's because of extreme debt issues, which we kind of have. We're above 120% debt to GDP, which is where you're usually at during war times, like we were during World War II, but we're not in the war, right? The second thing is, that those the rising nation like China coming over is a rising economic and social factor that's infringing on another country. So that's the second reason. The third reason is you lose your currency. And that's never a good thing if you lose your reserve currency. Think about the Great Depression times 2 or times 3. So that reset button feels like it's kind of around the corner. I'm not saying this year, next year, 10 years, 20 years. I'm talking maybe towards the end of my lifetime, maybe my kid's lifetime. We have to be somewhat concerned about that. In that case, gold becomes a hedge because nothing's better than that precious metal that you can actually have in your physical pocket. Actually, a lot of my clients own gold, and I'm not talking GLD, I'm not talking the ETFs out there, I'm talking physical gold, because they just feel comfortable knowing they have 5 to 10% of their money in their house at all times, hedging against the system. Because these times, I mean, I know everyone's got the doomsday in their lifetime. They feel, whether it's World War II that felt like doomsday, Cold War era, everyone kind of feels that way in their lifetime. But there's actually data now that suggests that, and Ray Dalio specifically in his book, Principles of Changing World Order, a phenomenal book, talks about the changing world order and how we have to be concerned and worry about that. So I know that's a long-term perspective. I like gold. I think it's going to remain an inflation hedge. It's going to remain.
There's more. My battery went out of my camera. So full camera on Luke. I have an extra battery, Joe. You're going to go 2 more minutes solo. I'm going to change my battery. You're going to talk about Bitcoin and what is happening with the structure of Bitcoin. And I'll set you up. I'm going to go change my battery. This is fun because you can handle this. You can go for a half hour. I could go take a nap and come back. You'll still be talking. Bitcoin
is interesting, man. I've had a lot of clients ask me about that.
Bitcoin recently spent over 30 days above 100,000. I'm going to change my battery. The stage is yours. I'll let you know when I come back. Be right back. Go ahead.
So Luke. I have a personal connection to Bitcoin. I actually bought my house because of Bitcoin. I should say I was able to afford my house because of Bitcoin when I was 23 years old. So what was it, 6 years ago? I bought my house and I had to sell my Bitcoin to, put the down payment down on the house. But I bought it back in 2017 because the libertarian in me says, the intermediary banks, governments, controlling money, it's never a good thing. And you have to personally own your money, which is why people like gold, but also why they like Bitcoin, because it cuts out the intermediary. Look, at the end of the day, Bitcoin is going to be here probably to stay for any point in the foreseeable future. It's going to go up. It has to go up over a long duration of time when you're talking 10 or 20 years, because as you print more money, inflation, whatever happens, as long as you have any inflationary pressure, Bitcoin, as long as it's denominated in dollars, is going to go up. And the the finite supply of Bitcoin, simple supply and demand metrics means it's going to go up. And the crazy thing is it's a $2 trillion market cap. I mean, it's still smaller than NVIDIA, Microsoft. I mean, it's smaller than these companies. And if you look at gold's market cap at $20 trillion, I mean, it's only 1/10 the size of gold. We could 10x from here, which puts it exactly at that $1 million coin target, putting that $20 trillion market cap. I think that's going to happen. I mean, the most ironic things that happen tend to actually happen the most likely. So the ironic thing would be one day you see on the news headlines that Bitcoin crosses above gold's market cap. So I do think that's on the horizon. And the fact of the matter is that it's becoming more acceptable. I mean, when I have my 75-year-old clients asking me what Bitcoin is, I mean, that shows you how much more prominent it is in society, how much it's talked about. And that simple talking about it means that there's going to be more demand. And then you have the ETFs that just came out a couple of years ago. That's going to increase demand. So simple supply and demand. It's, in my opinion, Bitcoin's the easiest asset class, commodity, whatever you want to call it, security to trade, because it's all supply and demand. It doesn't have any earnings. It doesn't have any potential windfalls to it except for government regulation. But it's so big right now that the government can't ban it, because if they ban it, they wipe out trillions of dollars in money. And that makes a ton of people upset. So talking about political issues, no one wants to vote on policies that gets them out of office. And this is one of those things. You wipe out a couple $1 trillion of wealth, that's going to get you out of office. So it's here to stay. It's going to go to $1 million a coin. I sold, just personally, I will tell you straight up, I sold my family's. I sold my Bitcoin at $70,000. If it gets back below 70, I'm looking more actually at 50. I'll scoop it back up around $50,000 a coin. I'm not buying it right here because it is a speculative asset. And in my opinion, we do have some weakening economic data on the horizon. I think it's going to partake with any kind of downside in the market, kind of like it did during the 20% tariff sell-off just a few months back.
That was awesome. And I am back with a fresh battery. I don't know if NASCAR is looking for help, but I heard boop, and I go, what was that noise? I go, oh yeah, I've been recording so much, I have no battery. Hey, bull bear debate. Here we go. Luke Lloyd, bull bear. Give us some reason to be bearish the stock market, and then follow up with why you're bullish the stock market. If you can be both, are you allowed to talk out of both sides?
I think it's our job to be both. That's a phenomenal question. I like this kind of idea because there's a lot of bearish and bullish signals right now. The bearish signals are that the job market's kind of on the brink of collapsing or breaking in some ways because of AI, because of weakening consumer spending data, because of debt issues. You can cite a lot of different things. The job market kind of looks like it's on the horizon of breaking, maybe because of higher interest rates as well, right? So I'm paying attention to that. That's one definitely reason you want to pay attention to. And then the second reason is, this China-U.S. trade war. I mean, at the end of the day, we could have good earnings here in America from a corporate standpoint, but if you're the number 2 nation in the world, do you help the number 1 nation get ahead even more when your economy is worse off than the number 1 nation? Ever since really the Evergrande situation a couple of years ago, no, you bring them down with you. You hurt them, right? So even though all we hear in the news cycle is good things recently, I think that we have to really pay attention that this can be dragged out longer than expected. There's probably going to be some negative news lines here soon, and we saw how quickly the market dropped on the initial tariff news. We could see another 10 or 20% decline. So that's the bearish. The bullish side is this U.S.-China trade deal somehow does happen very quickly. Tariffs kind of come off, and there's really a huge economic boom in some ways from the stock market rallying standpoint. Maybe the job market doesn't crack. Maybe AI actually adds so much productivity to the system, and employees actually learn how to aid it beside them, and they actually don't get replaced by it. They just learn how to become more productive themselves. If that happens, I mean, we could see extreme amount of returns in the stock market because the AI boom is actually just a big wealth transfer to the top. So those that own assets are actually going to do better.
Ooh, that's a mouthful. All right, Mr. Luke Lloyd, if someone's interested in working with you or just learning more or just having a conversation. By the way, my summer intern from last year contacted you. Young Sawyer Satram said, I spoke with Luke Lloyd. He goes, yeah, he spent all types of time with me. Boy, that means a lot. When a kid can graduate college and call a guy like you and ask some questions.
I'm
and
always around.
He did just receive a job in doing similar to what you're doing. All right, Luke, how do people get a hold of you?
I was just in his shoes 7 years ago, right? So, 6 years ago, right? So it wasn't that much long ago that I was doing the calling around to try to help someone out. So I'm always there to help someone out. And the way to contact me, email luke@lloydfg.com or just go to my website, lloydfg.com, and you can book a meeting with me directly on there. I make myself accessible. Again, I'm a real person. I'm not a behind the screen person that's trying to portray myself and put my chest out being a little too arrogant. I'm just trying to have good conversations, real conversations with real people.
Well, when you're not on the Apple Media or RFD, I occasionally see you on Fox and some of those others. That's fun. Let me ask you something, and this on a serious note, because we have time. It's funny because there's no one telling us in our ear we got to wrap. When you go on a major network like that on that set, is it any different than anything else? Is it more intense, less intense? I mean, is it just pretty much the same thing? Just a bigger stage?
I would say it's the same exact mindset, same exact thing. I mean, I will be honest. When I first started doing national TV, whether it was Fox, CNBC, RFD TV, I mean, anytime you do any kind of national TV, that first couple of times or even that first year, you feel like you're going to have a heart attack. I would be lying if I didn't say that. So I had to learn how to control my emotions. But I mean, when I'm going to go to New York City here in about a week and a half, and I'll be on set with I'll be co-hosting Marie Bartiromo's show in the morning. I'll be co-hosting Big Money Show between 12 and 2 on, I think, the Tuesday, the 24th or 25th. So I'll be out there, and it's the exact same mindset mentality. You'd actually be surprised how small the studio sets are. I mean, you would think that they'd be huge, but like they're actually a lot smaller than you expect. But again, it's actually more fun being in person. I will say that. Being behind the camera, that's all I knew for 3 years, because from 2020 to 2023, no one was going on set. It was all virtual. I actually just did my first virtual or in-person appearance back in 2023. So it's been 2 years now. And I will say it's a world of difference. Being on set is a lot more personable, and it's a lot more fun, to be honest.
I love it. I love when I get the host for Scotty and you come on. I look at the sheet and I go, oh, Luke, this will be fun. Like how fast my heart's beating, it goes down 10 beats when you're on. All right, buddy.
I feel the same way, my man. I mean, we're going to see each other soon. I'll be down in Nashville.
And
we have that trip coming up in July. I'll be coming down.
You're going to help my brother and I
brainstorm some things together.
Absolutely. There's about 10 things you said you could help AI. You're like, you're doing this, you're doing that. I'm going to show you how to automate that with AI, and you're going to teach a couple old dogs a couple new tricks. All right, Luke Lloyd. We call this the LFG, Agbull LFG with Luke Lloyd. What does LFG mean? Someone's going to think it means something else. What is LFG?
Well, it means a lot of things. You can interpret it away whichever way you choose. But
I'm going to go with Lloyd Financial Group.
I will say that's one of the reasons why I did pick Lloyd Financial Group, because that acronym is very prominent. And frankly, I'm a pretty bold and outspoken person, so I think it fits me pretty well.
Well, let's go. Let's go. Lloyd, we'll see you next week. And thanks for coming on the show. I love going long form. I look forward to seeing you in Nashville. Joe and I will come visit you in Kentucky. And yes, I have a place for you here when you come to Nashville, you and the summer intern. And I can't wait to learn from you. You're going to have a wonderful career. Thank you. And I will see you
Tommy,
next
thanks for
week,
having
my
me, my
friend.
man.
Roll the tape, Joe.